Yo, what's going on, everybody? It is Wednesday, September 7th. So we had a rebound today. There's something happening right now. I'm not going to say what it is. You're going to have to sign up for a free trial of my report, and I'll send you an email. I think it's very important. But I will remind you of something that I spoke about in July and August, which next week is that quarterly corporate tax payment. All right, that's going to be like about 100 billion, 115 billion, maybe 120 billion drain. Now, right now, for the month of September through September 6th, that was yesterday, the federal government is running an 84 billion deficit for the month. So that's going to be wiped out, all right? Remember, last month we had a 227 billion deficit. And just to refresh your memory, what is a deficit? A deficit is a net addition to the financial balances of the economy. It's adding water to the swimming pool. The level's going up. So that was good. Now, you may recall that I mentioned in late August, that I thought some of the selling, remember the selling started with that ridiculous 8-minute speech by Powell at Jackson Hole when he said, I'm going to have to inflict pain. And that jacked up the expectation or the forecast for what the Fed's going to do in the September meeting, September 21st. Right now it's 75 basis point. November is a 50 basis point. By the way, that November meeting, that's November 2nd. That's before the election. So I guess Biden's okay with that. He's going to, right now, futures markets are predicting a 50 basis point hike at that November 2nd meeting. And then in December, the probability right now is for a 25 basis point rate hike. And I'm going to talk about the Fed in a second, but yeah, so the whole thing got going on the downside. Remember, we went up to my level. I said back in June and July, I said we're going to go between I forget the lower bound, but I think it was something like 4250. I said 4250 to 4520 on the S&P, and I think we got up to like 4390, and we were still going. And then Powell made that 8-minute speech at Jackson Hole, the pain speech, and then zombie behavior. I don't even know if it's fair to call them zombies. I just think that well, yeah, they're zombies, let's face it. But people have been so brainwashed with this interest rate. Interest rates are bad. So anyway, we've been going down since then. And I said, I think that some of this selling was front running ahead of that corporate tax payment. We tend to see 4 times a year, and 5 times really, because you get the main April 15th when everybody has to file their taxes and pay or whatever. And then you have 4 times a year the quarterly tax payments for corporations. These are large net drains. All right, that's draining the water out of the swimming pool. Now the quarterly corporates are not as big as the April, but they add up. It's 4 times a year. But then spending starts to come back in again, and the water level goes back up. But I said, because of the atmosphere, and by atmosphere, I meant, the fear level, the worry level, because of the interest rate outlook and how everybody is freaked out about that. I mean, losing their minds about that. And I've been over this so many times about how they see it completely one-dimensional. They don't understand that really, when you think about it, rate hikes are, their income redistribution, their price setting, but they're also fiscal expansions because they equate to net transfers from the government to, the economy via that interest channel to income. People don't seem to pay attention to that. But I said maybe some of this selling was related to, everybody kind of like, oh, well, they're going to raise rates. The market's going to go down. I might as well, raise some cash right now to make that quarterly corporate tax payment. I don't know. I was speculating on this, but we'll see. I said at the time, we'll see whether I'm right or wrong, because, when next week rolls around and we get that quarterly corporate tax payment, if the market doesn't cave in, then I was right that the selling happened already, that it already happened. So we'll see. All right. I kind of think, that's how it's going to play out, but I could be wrong. We'll see next week. Anyway, for me personally, it doesn't affect my outlook. I mean, and again, something else popped up today. Go to my website, pitbulleconomics.com, sign up for a 30-day free trial of MMT Trader. I can't give out all these freebies. I got subscribers. I try to help you as much as I can with the macro picture and the understanding and the education and stuff like that. But today, the Fed, what's his name? Meister or Mester? I forget. He's the president of which Fed bank. He said, the Fed's going to have to slow down the economy. Meanwhile, we are now seeing GDP estimates for the third quarter being revised up. This is what really frustrates me. Sometimes, and I'm getting, now almost on a daily basis, I'm thinking like, I need to get out of this business. Like, I don't mind managing my own money, but I mean like advising and stuff like that, because I see so much, it's really incredible. I just see so much stupidity. I mean, this guy's on the FOMC. He's at the Fed. One of the Fed banks, the Atlanta Fed, puts out forecasts like every couple of days. They've been raising their forecasts. We're coming out of 2 quarters of negative growth, and growth is actually accelerating. Remember, they first, Atlanta Fed in their GDP Now forecast, they first had third quarter GDP growth something like less than 1%. Then it was revised to like 1.5%. Now it's revised to 2.6%. So here's this guy, Fed Meister, saying we got to slow it down. I mean, he has the data right in front of him. I mean, this is the institution, the Fed, that puts out this information. And I'm really getting sick and tired of, this type of false information. Like, these guys just say anything. And they're guilty too. And I'm not just pointing a finger at the Fed. It's the entire financial industry. It is the media. I mean, it's like this mental illness of monetarism. It's this behavior which is 100% rigidly attached to a belief system, like with the rates. Like, whenever they hear something, you don't even have to have an actual change in policy. Just if somebody says something, then boom, there's some kind of like, manic reaction. But the worst thing is that, we put, not me, but I mean, so much credence is put into these people. And you have to understand, folks, you have to understand, they know nothing. They are operating basically from like a belief system. This is the thing. This is total malpractice. If this were any other industry, okay, or any other company or any individual who continued to go on in the fashion like these guys do, over and over and over again, wrong policy, lack of understanding, completely like not even desirous of wanting to know how things work. Just let's go by the playbook. And, you know, they're accorded all this, you know, credibility. They are. They're accorded all this credibility. And this is the thing that is really, really bothersome and frustrating. Like, I try to help you guys. And I know for a lot of you, it's really, really hard. Because this stuff's been so ingrained into your brain. Like, you know, it's hard to let it go. It's hard to let it go. And I understand that. You know, and this is not, you know, the only example in history of, I mean, we've seen this, you know, in many things, in science, you know, you know, the sun revolves around the earth. You know, imagine when Copernicus came out and said, no, listen, I think it's the other way around. I think the earth is revolving around the sun. It's a matter of perspective. And people would be like, what, Copernicus, are you crazy? Just look up in the sky. You could see the sun moving across the sky. So it was like, that was, you know, kind of a heretical statement by Copernicus. But that's what the reality was. But these guys don't care. It's kind of like I did a video, you know, man, there's so many examples. I did a video back in during the pandemic in 2020 when you had this Neil Kashkari, who was the president of the Minneapolis Fed, saying, you know, because we had this huge, gigantic increase in personal saving. It went up to 6 trillion. It was, I'll put up a chart right here. It went up to 6 trillion, all right? Take a look. That spike. And he's like, now here's a guy who runs a Fed bank, a Federal Reserve Bank. He's like, yeah, I'm not that worried about the economy because savings went way up because we didn't go to movie theaters and restaurants. Dude, if I don't go to a movie theater and a restaurant, then the income and the savings of the movie theater owner and the restaurant owner goes down. That's not what makes savings go up. There has to be some entity that net spends, and the net spender in that situation was the government with the massive amount of stimulus checks that were being sent out. They literally filled up everybody's bank accounts. Taxes eventually sucked that out, and then the drop in spending. So when you look at that chart, you see it came back down again because we sucked out, this year alone, 1.7 trillion was taken out because of cuts in spending. All right. And that was like, imagine a car going 100 miles an hour and then slamming on the brakes. That's what explains, you know, why the market is so shaky, you know, but it had to adjust. I mean, also the economy's coming down from like a fourth quarter 2021 growth rate of like, what was it, like almost 10%. And then 2 quarters of negative. So yeah, it's like you're going 100 miles an hour, you're going 200 miles an hour, and you slam on the brakes. It's not because of the tax, because of the rate hikes. You just sucked almost 2 trillion out of you know, financial balances of the economy. That hit everybody. It hit people, it hit institutions, it hit firms. You don't hear any of that stuff. They don't say anything like that. The only thing you hear is the interest rates, which is baloney. Interest rates are irrelevant. The interest rate could be 30% if the economy is growing. What's the difference if the interest rate is at 0 and we're growing at 2.6%, or the interest rate is 30% and we're growing at 2.6%? It's the growth that matters because that measures the size of the economy, and the bigger the economy gets, the more we all get a piece of it. The pie gets larger. The interest rate is irrelevant. It's a completely arbitrary thing. I mean, there is... Anyway, I don't know. Yeah, so I get frustrated when I hear these people, because the reason is they're just accorded, not even that they're accorded so much credibility, which they are, and it's, it's unjustified. It's unjustified. All right? But they just keep on going with this, and they have no interest whatsoever in understanding, the reality of how things work. And even worse, if you talk to them about the reality of how things work, they will dismiss you completely. They will just dismiss you completely. Like, who are you to tell me, Meister at the Fed? I mean, your own freaking data is showing that we're accelerating. What slowed down engineering? And by the way, do you know why we're going up? You know why it went from 0.5 to 1.5 to 2.6? Yes, it was because of the rate hikes. Funneling income into the economy. And by the way, this is just at the very, very, very early stages, all right? When you think about it, I mean, yesterday I said there's 24 trillion held in the world of U.S. government securities. They're all going to be getting a raise, but it's going to take time because it depends on the maturities. There's a whole bunch of different maturities that are held. When things mature after time, because you have T-bills, those are quick. We're seeing the impact of that right now. But then you have 2-year notes, 5-year notes, 10-year notes, 7-year notes, 30-year bonds. As those things mature, the level is going to stay elevated, as the rates now, because new issuance of securities are going to have the higher coupon. They're going to have the higher interest rate attached. So we're talking way down the line. The amount of fiscal going to be pumped in. I mean, that swimming pool is going to be overflowing, man. It's going to be overflowing. So like I said yesterday, dudes, keep selling. Keep selling. I'm there with a bushel basket buying everything. And by the way, let me make a comment on oil today, which came down, I don't know if I mentioned this, but it was in my report for the last 3 weeks. My subscribers know this, that oil producers have been net sellers of futures for the last 3 weeks. Now, they're still net long in their position, but the last 3 weeks they were selling, and that put a price cap in the mid-90s, and now we're going down. So I am very curious to see this week's Friday's CFTC Commitment of Traders report, because I want to see, I'm pretty sure they're going to be buyers on this dip. All right? Because I don't believe we're going to see much lower oil prices, because growth is coming back. OPEC Plus just did 100,000 barrel a day output cut. That's just symbolic, but I think it was symbolic and also intended to say, look, we're going to do what is necessary to support prices. They're not going along with any of this capping Russian oil price cap stuff. Anyway, that's it, folks. What can I tell you, man? Everything's good. Everything's good. Don't be negative. Don't be negative. Everybody has this freaking, I don't know what it is. It's like this intrinsic need to be negative. Me too. But when I come on here, I try to do a little bit of cheerleading and education. All right. See you tomorrow. Bye.